Hi, welcome back to another edition of Flippers Fund Flows Insight. My name is Tom Rosane. Thanks for joining me today. I'll be reporting flows for the weekend of Wednesday, July 29th, 2015. We had about $4.6 billion leave the conventional fund business during the week, and it was really kind of one of those ho-hum weeks. It was off and on. We actually had earlier news from the likes of 3M, American Express, and even Caterpillar that actually sent people scurrying for cover. Disappointing earnings, disappointing guidance. But then as we got to the middle of the week, things looked a little bit better. We had some earnings reports that looked a little bit better. And we also had a reversal after having a big drop in the Chinese market of 8.5%, I think everybody recalls. On the last 2 days of trading, Tuesday and Wednesday of this past week, basically we learned that China actually started doing a little bit of recovery and things were looking better. We had some good news out of Greece that they actually accepted the second part of the austerity package. They didn't really accept it, but things were leaning that way as well. And so things improved quite a bit. And then we heard from the Fed that they are going to leave some wiggle room for future rate hikes as well. So they kind of made that soft as well. And it was kind of an interesting week for that. So we had off and then we had on again and off again. It was just that type of a week. Let's see how that panned out, though, as far as flows to our macro groups. If we take a look at equity funds, they saw about $700 million in outflow. Not a lot to write home about. Taxable bond funds, though, saw a bigger outflow, $2.9 billion. And muni bond funds saw about $180 million leave their coffers. And usually, money market funds are the big culprit. They really didn't do that much, only about $900 million of outflows as well. And that just shows us that people were sitting on the fence, kind of sitting on their hands, waiting to see what really is going to happen. There was a lot of big news, and they're really waiting for the Fed to do their thing. Well, let's see how this panned out in the individual macro groups themselves. And let's take a look at equity funds first. For equity funds, we saw for the fourth week in 5, negative performance, but that was down about 0.68%. And that led to the second week in 3 of outflows. As I told you, only $700 million in outflows. And this was really kind of the tale of two cities we've been seeing for quite some time. Domestic equity funds saw about $1.9 billion in outflows. The third consecutive week they've seen outflows. But for the second week in a row, we take a look at non-domestic equity funds, and they took in $1.2 billion. So I guess people were somewhat elated by the idea that, in fact, there may have been some resolution in Greece, and maybe Europe was going to look a little better. And also, we had some fair news in China region type of plays as well. So that was kind of interesting. If we break this down into a little bit finer detail, we saw large cap funds lose about $1.1 billion. Then we saw equity income funds lose about $400 million. Not a lot to write home about, but again, that was the culprit. If we take a look at international equity funds, they took in $1.3 billion, while global saw an outflow of about $100 million. So again, people are favoring this international play and have been for quite so many weeks. Let's take a look at how this panned out for ETFs in that group as well. Second consecutive week, we actually saw outflows, $1.1 billion. iShares NASDAQ, however, biotechnology funds saw about $400 million of new money come into their group, and iShare Core S&P 500 mid-cap. So S&P mid-cap saw about $400 million of new money come into that group as well. Now at the bottom, and usually when we're having some kind of iffy times, Spider, S&P 500 saw about $1.1 billion in outflows, and iShares MSCI emerging markets saw outflows to about the tune of $800 million. So that was kind of a big chunk out of that group. Of course, this on again, off again with emerging markets. I think the authorized participants didn't want to be caught holding the bag if something bad happened or if the Fed came out with some more disturbing news, and I think that's why we saw the outflows. Let's see how this then panned out for the fixed income universe. Again, I told you we had outflows. It's the first week in 4 that we've seen outflows, $2.9 billion this week. It's the second consecutive week we've seen negative returns, only to the tune of about 0.11%, but negative nonetheless. The big mover, though, the tenor of assets was flexible income funds. They saw about $300 million of money come into that group, and it's the 24th consecutive week that people have been putting money to work in that. Of course, people are still looking for yield. Government mortgage funds only saw about $35 million. Those are the only 2 groups that actually saw inflows this week. If we look at corporate investment grade debt funds, we saw about $1.4 billion leave their coffers, and that was the largest amount since October of 2013. So that's a big number as far as flows out of there. And there was a minor amount of outflows as well from our loan par group. Again, very small amount, but when we take a look at that, again, people were voting originally that the Fed would raise pretty quickly. Now I think they've come to the idea, yes, we'll probably have a raise, but maybe they'll just codify. Instead of 0 to 0.25, they'll just say 0.25. So again, people not running for the hills as far as loan par goes as well. Let's take a look at the ETF universe as far as the fixed income universe goes. And here we saw another outflow, $0.6 billion. It's first week in 4 that we've seen outflows. And where we saw money was a little bit of safe haven play. We saw the ETF group had taken iShares, 7 to 10 year Treasury ETF took in money, about $300 million. iShares 1 to 3 took in about $0.2 billion. But if we look at the bottom, again, people were kind of getting rid of that risk on play. So it makes sense. So we saw the iShares iBox high yield fund lose about $600 million. Again, not a big a point to make there. Only that there was a risk on play in that middle of the week that I was talking about. Here's something that was a little bit disturbing. I had given claim to fame to Jeff Turnahoy from the prior weeks. He had called for an actual inflow into muni bond funds, and certainly we had it last week. However, this week we actually saw another outflows. Muni bond funds saw about $1.75 million, $175 million leave their coffers, and it's the 12th week in 13 that they've seen outflows. However, this was the second week that we've seen in a row that they've had positive returns, 0.05%. So my bet is still on Jeff's opinion that we're going to start seeing inflows come back as soon as things settle down. And I think people are, again, just waiting to hear and get comfortable with what the Fed's possibly going to do. National munis were the culprit as far as $61 million, was about half the money that went out, a little bit less actually. So national munis saw about $61 million in outflow. First week in 3, they've seen outflows. And of course, that leaves the rest for single state munis as far as outflows go, as far as that goes. Well, let's turn our attention now to the money market universe. And again, we've been seeing some huge inflows and outflows over the last several weeks. And in this particular case, we didn't see a lot. So again, I believe people were sitting on the fence in a wait-and-see game type of universe. Let's take a look at the closer detail. Money market funds for the second week in 3, again, $0.9 billion in outflow. And how this broke out, taxable money market funds saw about $0.5 billion in outflow, while tax-exempt money market funds saw about $400 million in outflow. And if we broke that out even further, we see institutional investors from the taxable money market side saw about $1.4 billion versus an outflow of $1.9 billion for the retail investors. So obviously retail investors still pulling money out, but the institutional investors actually padding the coffers, letting it sit there for a while. And again, I think it's just waiting for a buying decision. Well, that really brings us to the end, and just a couple things that came up. Second quarter real GDP came out. Growth was close to estimates. We had a 2.3 versus a 2.5, so I think that's a positive thing. Obviously, people are going to keep an eye on what's going on internationally and what's happening in Greece and China. That's going to be a telltale for a lot of people to go. Obviously, we'll get more information this week. I'm shooting this on Monday. Normally, we do this on Fridays, but this week after Thursday, when we get our flows in, we'll know a little bit more about it, and one of our analysts will be able to talk to you about that. But if you want to do a deeper dive into some of the areas that you want to do research on, you can go to www.lipperusfundflows.com and take a look at for yourself at what happened for the week. If not, join us next week where one of our analysts will talk to you about flows for that particular week. Thanks for joining me. My name is Tom Rosine, wishing you the best in your wealth planning and creation.